Welcome again to all of our delegates who have joined us in, and welcome to the second day of the world's largest Fintech Fest, the Global Fintech Fest. In fact, this event is organized by Fintech Convergence Council and Payments Council of India, of Internet and Mobile Association of India, and National Payments Corporation of India. The fest is presented by the Ministry of Electronics and Information Technology, Government of India, and Reserve Bank of India, and supported by Niti Aayog and Invest India. We'd also like to take a minute to thank our partners for their fantastic support, our session partners, Australian Trade and Investment Commission, WorldPlay from FIS, eBowtech Corporation, CX partner, Zendesk, Cloud Communication partner, Root Mobile, Insights partner, CrediWatch, Conversational Messaging partner, Gupshop, Credit Insights partner, TransUnion Civil. Well, as we do believe that the second edition of the summit focuses on the theme Fintech empowering a global digital economy that'll provide an in-depth understanding of the latest business, policy, investment, and technology developments within the Fintech landscape globally. So on that note, I welcome all the delegates who have hopped in and joined us in here for a keynote on the Diaspora talk. And I think it's absolutely pertinent in the kind of times that we are in order to understand more about this. We in fact have the esteemed presence of our Secretary, United Nations Capital Development Fund. In fact, she's a globally experienced investment and development banker with a 30-year track record associated with raising and managing institutional, public and private development capital. So yes, while we will be requesting Preeti to share her thoughts, I'd also like to urge our members of the audience, in case of any questions, you may please go ahead and put it in the Q&A chat box, and if time permits, we'll also be happy to address them. But on that note, let's deep dive into our next session, featuring none other than Preeti Sinha. So firstly, Preeti, thank you so much. I believe you joined us early in the morning, all the way from New York. So on that note, I'm not going to delay it any further. I'm just going to hand it over directly to you. Over to you, ma'am.
Thank you, Kavya, and good morning, good afternoon, good evening to all. Yes, I do join you from New York. And on behalf of the UN Capital Development Fund, I'm delighted to be here to be speaking with you today. I'm privileged to serve as its executive secretary and represent a great team who are behind me on this initiative with you. I would also like to thank the IAMAI for this opportunity to talk about this very important topic of digital finance, and in particular, thinking about sustainable development and the role of development and digital finance. Needless to say that we are convening at a very unprecedented time, and the role of digital just becomes so much more important during this pandemic, the most significant health crisis of our time. So I'd like to spend the next few minutes with you, sharing my thoughts and hopefully having a dialogue. We just finished our UN General Assembly in New York, and you could imagine that there were several significant thoughts, views, expressions that came out of them. One is, of course, on vaccine equality. But again, let me jump into my thoughts, particularly on finance in the digital era and what it means for people and community all over the world. As we enter what the UN calls the Decade of Action, which was 2020 to 2030, we really feel we have to believe really in achieving the Sustainable Development Goals. And that requires accelerating transformational change, driven by innovation, risk-taking, and partnerships. Modeling financial pathways that are inclusive of the last-mile communities will be a key ingredient to enable such transformational change to take place, to ensure that no one is left behind. So here at UNCDF as well, we have strategized and created an inclusive digital economy strategy, which leaves no one behind in the digital era. Accelerating SDG action has become more urgent in the COVID crisis, reinforcing challenges, particularly grave risks to the poor and vulnerable communities, including women, youth, informal workers, migrants, and smallholder farmers. The pandemic's unprecedented impact increases the risk that the vulnerable communities across markets will be left behind. Indeed, about 97 million more people have been pushed back into poverty. While progress in implementing the 2030 agenda has been uneven over the past 5 years, a number of shifts in the development landscape bring important opportunities for markets across the world. One of them is the digital finance revolution, which has profound impact on global economy and is transforming societies. The number of registered global mobile money accounts surpassed 1 billion in 2019, with 469 million such accounts in sub-Saharan Africa alone. The digital revolution helps drive increased access to financial services and is changing how poor people save, receive social payments and remittances, and buy products and services. It is also changing how micro, small, and medium-sized enterprises, the MSMEs, can access financing to grow their businesses and deliver services and SDG solutions more efficiently. The United Nations has been no stranger to this, and through its various agencies, we have been working with governments, multilaterals, and the public and private sector on building various global dialogues and actions around the effort of financing in the digital era. The SDGs are the framework for this effort, for us to think about the future in general, but the future of finance in the digital era in particular. To achieve this vision, it is going to take investment. Investment in things that improve the quality of lives of people and extend our lives on this planet and extend the life of our planet indeed. While we are talking about finance and digital as a collective, we are clearly considering many tools and capabilities outside of the realm of traditional finance, particularly technologies that could play a role in scaling the SDG agenda and achieving the goals, including mobile connectivity, big data, AI, blockchain, and the Internet of Things, all very relevant digital tools to enable our world going further. At the same time, we should acknowledge that the financial sector has been slower to adapt to these technologies because of the high barriers to entry, capital requirements, regulatory requirements, and technology infrastructure. But when these barriers are overcome, new actors and business models are rushing in to take advantage of the inefficiencies on finance that could be overcome by digital finance. What we have seen happening in the payment systems worldwide, with new actors leading innovation, many of them which are not financial institutions. Here, India is a living example of how such technologies could transform lives and communities, particularly in the last mile, as well as how digital financing has enabled new business models that could represent the foundation for fundamentally inclusive economies, fostering greater sustainable finance and investment. We see this happening in developed and developing countries, but India is a great example of it. Expanding the use of financial technology alone could drive growth across developing countries by up to $3.7 trillion in the next 5 years, a huge amount. The possibilities are tremendous. We are already witnessing immediate gains, lower costs due to mobile delivery systems, more efficient financial services, gains in financial inclusion, and new business models, many of which are linked to the SDGs. Here are some interesting figures. Regarding new business models based on pay-as-you-go, as we call it pay-go, solutions with digital payments, 130 million off-grid solar products have been sold globally since 2010. Ranging from small portable lanterns to about 100+ watt solar home systems capable of powering appliances such as TVs and fans. In the area of health costs, InsurTech innovator Bima has reached 26 million low-income people with basic insurance and over-the-phone health advice. They did this by reducing underwriting and claims processing costs using mobile phones and customer data. This was supported by UNCDF and Allianz, which invested $96.6 million, citing their commitment to digitization as a way of reaching the next billion customers. Think of the impact on the 100 million people forced into extreme poverty every year due to the health costs. This is a WHO World Bank report 2017. So that's the impact. Some ideas have not scaled, but here's an idea for their future impact. Credit for women. Women-owned businesses face a $1.7 trillion credit gap globally, as said by IFC. A pilot in the Dominican Republic using alternative data and gender-differentiated credit scoring model qualified 35% more women for credit than traditional models. If applied globally, this could unlock $600 million in financing for women. This was a report by the UN in 2018. So credit for women, very important. In short, there are already convincing indicators of the power of digital revolution in advancing finance for sustainability. But there is no guarantee that it will. The impact of digitization on sustainable development will depend on whether this technology is used for good and whether it leads to scale. So I'd like to encourage all of us to think about technology for good, and let's all come together to scale. Good intentions help, of course. In China, Ant Financial Services and Forest Platform has helped more than 300 million people reduce their ecological footprint. It was a creative and purposefully driven, environmentally conscious decision by Ant Financial that captured the Chinese consumer's imagination in the realm of behavioral banking. But bad intentions cannot be underestimated. Digital financing can facilitate illicit financial flows, which cost developing countries billions of dollars every year. And algorithms sometimes systemize discriminatory practices as they can eliminate them, but they can also create them. All said, this also makes for policy and regulation as well as consumer protection more challenging than ever. The institution-led approach to regulating is being overtaken by the need to have a functional approach, not categorizing institutions by what they are, but what they do. The next wave of technological application will cause even greater change and mean more difficult choices and decisions for policymakers and regulators. I hope this forum, which is so important in bringing all stakeholders together, will help in that process. The growth of data and the use of it, assisted by artificial intelligence, might redesign century-old methods of how financing is done. Data points that we used for decades are being supplemented by alternative data, largely generated through social networks and e-commerce platforms. This helps us to better determine risk at the individual and global level. Distributed ledger technologies also create tremendous opportunities to create efficiencies in moving money and protecting data, but will create huge changes in who does what and will take time to figure it out to make it more inclusive. As we said, up to a point, this may have a democratic effect, but at some point in the future, the financial system will do what it was created to do, to weed out bad risks, to focus on better risks. There is also evidence that technology can amplify bias rather than eliminate it. This is a great risk that we should keep in mind, that the digital divide in digital data and finance does not become more pronounced. The equation we need to answer is whether technology can be harnessed to better align financing to the needs of the global citizenry and the planet itself. I think we can all agree that it can, but perhaps it's better not to leave it to chance. We know that good intentions are not enough. Perhaps the most important question we need to ask ourselves is, how can the citizen be empowered to be a co-creator in financing decisions towards more beneficial outcomes, rather than just a consumer? For good use of technology to scale, it also takes good policies that not only enable technologies, but incentivize their use for sustainable outcomes. This has much to do with understanding and changing the current incentives and power structures in our financial systems. We need to think big, and we need to think outside the box. For example, digital finance is rapidly changing the way we consume, and how we consume has a great impact on people and planet. Should we be focusing on how digital channels can allow for shaping consumer behavior, ideally for the better? We need a more active dialogue with actors in the private sector, especially the financial sector, many of whom have embraced and enhanced the use of SDGs in their work to find innovative ways to achieve them. And we need to have this conversation with policymakers and regulators who make the rules for the system. As an outcome of the UN Secretary General's Task Force on Digital Financing for the SDGs, which was achieved over the last few years, it was a global dialogue set up jointly by the UN Capital Development Fund and UNDP to tackle these kinds of discussions and actions aimed towards how digitalization opens the way for the citizen to be less of an object and more of a subject in the financial system, rather than being viewed simply as a commodity in a new data-driven world. How could private sector players play a role in which there is a value creator rather than just offering a product? And which policies and regulations are necessary preconditions for ensuring that the digitalization of financing has positive outcomes? And the question we must ask ourselves is, are we seeing the long-term goal as we go about designing the financial system of the future? Can we do a better job, perhaps be more bold, to ensure that we don't miss the opportunity to move towards a digital future that puts citizens at the center? At the UN Capital Development Fund, our mission involves making finance work for the poor and to achieve this promise of the SDGs, to leave no one behind. For us, leaving nobody behind in the digital era is a strategy. Its core principles are that the financial inclusion is not an end, but a means to an end. That is why you can expect UNCDF to work towards reaching a range of customer segments, including women, youth, seniors, migrants, informal workers, and refugees, to help them earn more, plan and spend wisely, save appropriately, borrow healthily, and manage risks better. But we cannot pursue this important work in advancing financial health without our partners, both the private sector and the regulators, as well as many of our counterparts, other multilaterals and donors. India has been a key player in this ecosystem, and UNCDF has been working in India on this key subject, both to address the needs globally, but also to be a bridge between India and the rest of the world. We look forward to continuing this relationship by shaping a more long-term action together, and would certainly like to hear what more we could do to strengthen this bond. The more advanced markets like India are building the digital finance architecture that the rest of the world must look at and embrace. If the global financial crisis has taught us one lesson, it is that crises are no longer just national or regional. They are global. We all rise and we all fall together. At the same time, prosperity can be shared, not necessarily at the moment equally or fairly, as rising income disparities in the last 10 years have shown, but hopefully with digital mechanisms that can be achieved more equally and fairly. In closing, I would like to thank again the Internet and Mobile Association of India for organizing the Global Fintech Fest 2021 forum. To the public and private sector present here, we thank you and we promise the UN system's support and partnership in perpetuating an inclusive and resilient economies all over the world. Thank you so much for your attention, to listening to some of my views and thoughts, and back over to you, Kavya. Thank you so much.
Thank you very much indeed, Preeti, because I think a very important and a crucial point that you did share is the learning from the crisis, that it's not just national or regional, it's a global emotion for that matter. And I do believe that you managed to give a very holistic overview of the entire scenario so beautifully with your insights. So thank you very much, Preeti, for joining us on an early morning at your end. But thank you for sharing your thoughts at the fest over here.
Thank you, Kavya, and thank you to all for listening. Looking forward to connecting again.
Absolutely. Thank you again. Meanwhile, ladies and gentlemen, all our delegates, it's also time to indulge in all the sessions that are part of the fest. So we do hope you're joining in and extracting as many perspectives as possible. So with that, see you all in the next set of sessions as well. And we hope you're also taking some time off to visit the partner booths, to connect with the partners, all the representatives at the partner booths as well. And you can do all that, in fact, at the lounge area or at the exhibition area. At the lounge, you can get to network with your peer members. At the exhibition area, you can connect with the partner booths as well. So on that note, we'll see you all in the next set of sessions. Thank you very much.